Let's go to our man Jim in Palm Harbor. Hey, Jim, what's going on, brother?
Good morning, guys. How are y'all doing?
Hey, Jim.
Great.
Good morning,
Yourself, man?
What? I couldn't hear you.
No, I said we're doing great. Yourself?
Oh, I'm doing fine.
Good.
I was calling about Amazon again just to see. It looks like it's already broken through one level of resistance, and it's knocking on the door of another level of resistance. And I was just wondering if you think the bottom's in on that, or if it's just a real short-term bounce.
Yeah, stay right there. We'll be coming right back. We'll do the oil numbers quick, Jim, and we'll come right back to you. All right?
Yeah, no problem.
Awesome. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 354, Nasdaq up 190, S&P's up 40. Welcome back, folks. So, oil.
We got the numbers. So we have crude oil inventories rising 3.22 million barrels. The expectation somewhere between about 3.2. Bloomberg survey was coming in at about 4.2 increase. Pretty close. Let's jump back to the market, see how we're trading. Jumping over the chart. And as you might expect, pretty muted response so far. We're trading at, again, about 65.90 prior to that news. 10 cents under that 66 price point. Market jumping around a little bit higher action, but sitting there at basically $66. We'll check back in through the hour.
It was interesting because the API was a lot bigger yesterday.
It was. I think came in at 5.7 maybe or something like that. Definitely a big number. We'll check back in, see what's going on.
And we're talking with our man Jim, and we are talking Amazon. So it looks to me, I mean, this is a real bounce, Jim. So, I mean, if you're going to, and I would say that, yeah, Amazon is going to do a bounce, because when we take a look at it, what you're going to see is that, you get down to 1476, it rejected it. It looks like, let me do this, because I can do this on the monthly, too. Let's see. Okay, so on the monthly...
Quite a monthly bar.
Yeah. On the monthly, it's way too much volume. So that's saying, number one, it's going to be back down to that level, okay? On the weekly, if you're just looking for a bounce, it did reject it. And it looks like, the bar we rejected was the high volume bar from April 27th. Below this, 1415. You get down to 1476. So, I mean, if you're looking for something to go to, I don't know, 1685... It's not bad. Do you know what I mean? And Amazon is Amazon. Do you know what I mean? So.
Yeah, I was looking to get in when it pretty well is at bottom, but it's hard. I don't even understand why exactly it's bouncing today. Do you?
Well, what happens is that when you go down as fast as we went down in the marketplace, right? It takes a huge amount of energy to go down and go up. I mean, this is the largest down move we've had. Almost in 9 years. So it expends energy, and then what ends up happening is that you always get a bounce.
Yeah.
And if the bounce comes on light volume, to me that's setting up a B to a C and ABC down. If you're looking to buy Amazon for a long term, don't buy it right now, because you're going to have a shot on it, and it's going to be really hard to buy Amazon. You've probably heard me say this before, because I suspect when we're done with this correction, Amazon's probably going to be down somewhere into 1170, 1265 to 1170 looks to be game, And now the thing that's bizarre about that, well, not bizarre, but if you just go with the percentages, because we had come up so dramatically, if I just take it from, I would say that, February of 2016, it's almost a straight line move up. If I just take it from there, a 50% retracement is 1275. And that's a normal retracement in a bull market move. It's, but because we went up so fast, this retracement theory is pretty intense, man, so I just hang on a little bit longer, because my understand, you want to buy it in the long term. That's what you're looking for, right?
Right, yeah. It's going to be long term once I get in it.
Right, so don't buy it yet.
I had gotten in it at one point and did real well, and then I got into it, unfortunately, a little bit at 1800 and something, before, and it went up, and then it crashed on me.
Right.
I had to get out of it with a loss then. So.
Just wait.
Anyway.
Just wait this baby out. That's what we're going to get a lot of information in the next couple of days, and one of the big ones is going to be these bonds. If these bonds do not go down in volume, that is telling me that, hey, guess what? The rates are still going to go down. And that's about as deviant as you can get. And if we have the S&P, if it's going up if the volume's contracting, the probability is really good that we're going to go after that high volume low in the S&P, which we haven't hit yet, because many of the stocks have hit it. And, you know, I've been basically doing this long enough that, you know, when you get sectors hitting it and stocks hitting it, you know, bottom line is that the S&P will get hit, you know. And the other thing is just keep your eye on the financials, because inside the financials, we got under it. And how it comes back on the other side of it's going to be important. So 2676, the financials should not be underneath that if this market's going to be healthy, because the financials make more money than anyone, and they're always going to make more money than everyone. You know, it just happens that they pay so many fines simultaneously because it's built into their system now for basically taking people that are cleaners. But the financials, you know, I said would give us all a good indication. If that stays underneath that February low, we're not done going down, you know.
Okay. Well, that's good to know. I really appreciate you guys.
Well,
y'all have a great day.
You also have a great one, man. Have a safe one.
Thanks, Jim.